Hello friends, many of you are investor in the capital market, in equity market. But tell me, how many of you read the annual reports of those company in which you are investing? Very few. Annual report is a very important tool for you to understand in detail about the company, not only its financials, but many things which will give you a clear idea whether to invest in this company or not, and if yes, at what rate, what is the right valuation. So let's go through in detail the contents of annual report and how do you interpret them. So first of all, when you open the annual report, there is company's profile, the name of the company, the board of directors of the company, how many are executive directors, promoter directors, how many are independent directors, then who are the auditors of this company, who are the company secretary of this company, who are the bankers of this company, who are the registrar and transfer agent of this company. Whole lot of detail you get, which is also very important, because when you know who are the independent directors and if you read their profile, you will come to know the quality in this company and its management. Thereafter comes the notice of annual general meeting. Now notice many a times is attached in the annual report itself or sent as an addendum or an extra separate copy. But notice is also very important because apart from the standard official matters, it also has some special businesses to carry out. And you must understand that what are those special businesses. Is the company raising capital? Is the company hiving off its division, or is the company acquiring some other company? These are all mentioned in those resolutions as a special business. And nowadays in this era of e-voting, you can all participate into the, in these resolutions saying yes or no. Then comes a very important part of directors' report. Directors in their report give a summary of the financials of the company, any changes in the capital structure of the company, what is the business outlook for future, what about its subsidiary and associate companies, how did they perform, was there any change in the board of directors of the company, all the properties of the companies are insured and assured, relationship with the people, the workers, the staff of the company, and a whole lot of information including the gratitudes to the people who have supported the company. Along with this director's report, there is a management discussion report. In management discussion, not only the company's own position is discussed and seen, but it is connected with the global happenings, with the local domestic economy, with the sector itself in which the company is, and within that how did this company perform, the entire SWOT analysis of the company, the risk management policies, the HR policies, various statutory obligations are defined, stated in the management discussion report. And nowadays one more report which is on corporate social responsibility, CSR. As you all know, CSR initially is applicable to the companies which have turnover of 1000 crore in Indian rupees or have the profits of 5 crore or more or net worth of more than 500 crore. Any one of this, if they have, they become liable for this CSR obligations. I will not go in detail. For that you can see my another video. After having completed the director's report, the another important and rather very important part of the balance sheet is the auditor's report. Now what do the auditors do? The auditors certify the fairness of the statement of affairs of the company, its profit and loss account, its balance sheets, its following up of standard practices, accounting standards, And if the auditor finds there is some deviation, there are some litigations, some cases, company has not paid the taxes or any anomalies which should not otherwise be there in the normal course of the business, the auditor qualifies its report. And for you, it is very important as an informed investor to read these qualifications and judge what will be the impact of these qualifications on the company in future. So, auditor report is very important. Then we come to the financial statements. The financial statement comprising of the profit and loss account. The profit and loss account has to be carefully read and understood. What is the top line of the company? From the main business of the company, how much the company has earned, total income. What are the expenditure? What is the percentage of the raw material if it is a manufacturing company which is consumed? It's a high margin, high contribution company or less margin, less contribution company. What kind of expenses are there in the company? Are they fixed or variable? Are they in proportion to other peer companies, or there is a deviation? What is the ratio of EBITDA to the sales? Earning before interest, depreciation and tax, that is EBITDA. What is the net profit ratio before tax and what is the net profit ratio after tax? And then compare with the peer companies, how this company is performing among them, because you are an investor, you are going to invest in the equity of this company. And then next comes the balance sheet, the statement of affair of the company. Balance sheet again is very important document because it shows the total health of the company. What is the capital of the company? What are the reserves of the company? If you look to the liability side, what are the long-term secured loan, long-term unsecured loan, short-term secured loan, short-term unsecured loans. Then what are the current liabilities of the company, what are the provisions which the company has made, and then to the asset side, what are the fixed assets, what are the current assets, what is the investment which the company has made, the current assets comprising of stock, book debt, loans and advances, and then with the help of various ratios, you analyze the health position of this company. Then another statement which is there is a cash flow statement. How the cash has come in and gone. The cash came through the income, it came through the issue of capital if there in that year, it came through the raising of loans, it came through the increase in the liabilities, it went into redemption of debentures if debentures were there, it went into capex building, it went into increase in the working capital. How is the match between the long term and the short term? Whether the short term resources have been spent for the long term, which is not right, and whether the long term resources raised have no use for long term but spent in short term. You have to analyze that and then take a judgment. Then comes schedules and notes to the account. You have to read every schedule, the breakup of capital, the breakup of reserves, the breakup of loans, secured loan, unsecured loan, breakup of creditors, breakup of debtors, loans and advances, fixed assets, there is a fixed asset schedule, and notes whether the company is following the accounting standard consecutively or is there any change in the accounting standard policies, whether full disclosure of contingent liabilities have been made. Contingent liability can be for any dues which the company has not accepted. It can be for any contract which has been awarded but which has not fully provided for or spent along with the amount which is already spent or the margin money. It can be for the guarantees issued by the bankers for and on behalf of the company. And various notes clarifying the managerial remuneration, the taxation policy, the tax arrears, the cases pending against the company, and whole lot of information which the management wants to give by way of a note to the accounts. One important point which we left to be covered was the corporate governance report. So here in the annual report also, the company do certify that it followed the practice of corporate governance as required under the law, under the rules. And one more thing is that in case the company has subsidiaries, companies, associate companies, then it has to give a consolidated accounts also, which is also part of the annual report. I will not go in detail of that, which you can look at, but ultimately the principles are the same. So as an investor, you have to be an informed investor. And to be an informed investor, apart from what you see and watch on the television or on the internet, it is very important for you yourself to look at the balance sheet of the company. You are investing thousands, lakhs and crores of rupees in the equities of those companies, but you are not bothering to spend 1-2 hours, reading and studying the balance sheet. So from my advice is today is that start reading, analyzing the financial accounts and annual report of the company. You will be better informed investor. Thank you.